Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to Casual Friday and what is ostensibly finally a breakout retail trading team. This is Master coming to you live from Puppet Show Central with your routine briefing. So we're gonna jump right into things here today, starting with the feature tweeted today, we'll call it. And what's going on here, this is just a guy I like to follow on Twitter, less about who it is and more about what you're seeing with the market. This was posted yesterday. This is before today's fun little move here. And yeah, so really the crux of the matter here is we're starting to see a little bit of change, I think, in what's going on under the surface. So after this slide, there's still a bear case to be had presented by the guys at Tier 1 Alpha, yet right now you're kind of seeing a potential breakout here being confirmed by volatility, absolute massive move in volatility the past couple days, and so we will see if it continues. So before we jump into the price action, let's just kind of get a devil's advocate bearish side of things here. So these are the screenshots I took from today's issue of that Tier 1 Alpha newsletter. Just go to tier1alpha.com if you're interested in that, not affiliate in any way, yada yada. This is just kind of what I pulled from today, what I thought was pretty interesting. So I'm not just going to sit here and read this to you. I will post these slides as a comment after going through this briefing today, and you can just access them there. So if you go to that resource folder in the description of this video, you can find all my resources, which includes the slides from these briefings. So if you want to read them more in detail, they'll be there. I'm not going to spend too much time on them. I just kind of want to point out a couple of different things, mainly starting with what's going on in volatility here. So you're seeing that large, extremely large move as when we get to that slide, you'll see it in visual form, that very large move in volatility. Yet what is happening there is you're seeing a divergence between volatility itself, VIX, and the vol, which you can see on this chart here. So what does that mean? Perhaps we are due for a spike at some point here. I mean, it's kind of, at this point, obvious, just given the extreme sell-off that we've had in volatility, and you're seeing that reflected in the vol VVIX index as well. So on top of that, breadth is improving as we saw on that last slide, yet still 70% of the S&P 500 is in a bear market. We're still being led by the usual suspects, and although breadth is improving, we're not seeing that confirmation of the new bull market. Although we have been in an uptrend, in my opinion, since March, we're not seeing that confirmation that will lead us to higher highs. And as we move to the price action side of things, you'll see exactly where we are and why I think it makes sense that we may have a pullback here, if indeed we are not entering that new phase of the bull market. And even if we are, I think we're due for a pullback by any stretch of the imagination. And I'm not just talking about RSI, I'm talking about a lot of different things, which we're going to go over in another slide here. So before doing that, I just want to point out that final slide to the right, the ISM Manufacturing Index, often a good signal for recession, and we're still not seeing the improvement there either. So that's your bear case, just because we want to reflect both sides here. Yeah, as we move on to price action, you can see it's not being reflected in the big picture, short term, or really anywhere. So just starting with our warm-up document today, I think it was pretty interesting. You did have that 100% net long overnight inventory, which often leads to an unwind, and the bears tried early in the morning. So we hit that final SPY gap at about 425.50 and were at first rejected, yet the bulls very quickly recovered that and took us to new highs there. So we still do have that 100% net long inventory overnight. If indeed they want to conduct a cute little rug pull today, I'm not expecting that. I was actually talking to a couple of friends yesterday saying that we have not seen a close at the very extreme in SPX for a while. So as it stands, if you look at the internals, especially today, I haven't seen internals this bullish in quite a while. If you look at all of that, it would make sense for us potentially closing to the high today. So I'm not shorting this thing. I have tried a couple of shorts. The first one was successful. It was just a short of that SPY gap. And then the other one here, I just scratched for like 2 or 3 points profit. So from here on out, I'm just kind of looking for those long entries the rest of the day. And I'm not getting involved until at least 1400. So normally I don't trade past noon if I'm profitable. Yeah, today I'm looking, like I said, for that breakout and that potential test of 4,300 above. So either I'm going to look to get in the afternoon here, or if we get a really steep pullback during the lunch hour, I will check it out at about 5-10 points lower here. So besides that, we're not seeing rotation, so I'm going to have to change that on the TPO. We're actually now seeing definitely more of that trendy look. In fact, let me just take a look at our TPO chart here. As we're going. So yeah, you're seeing that double distribution, that shift to double distribution with a single near about 42.73. Like I said, I think that's a great spot for an entry between 70 and 75. I'm going to join the team bulls. So we'll see about that. I'm going to change that in the warp document, which you can access also via the description of this video. And I keep that updated as the day goes on, especially with these SPY levels, which you can see there. So we're at a bunch of SPY levels right now. This 426.50 really to 428 area is currently a tentative supply cluster. And you'll see that when we get to the price action chart exactly why. Yet really, and as long as the internals especially stay where they are, as long as volatility stays trending down at least intraday here, I'm looking for a potential continuation on the squeeze. So we'll see what happens there. Beyond 42.61, we are beyond the expected move once again. And so right now we are beyond that. If we do get above 42.90, by the way, on the SPX, that is going to be an outlier move. And what usually happens with those outlier moves is, again, we tend to close at an extreme. So we'll be watching that as the day goes on. And I'm going to correct that rotation note right now, actually, just so don't forget to do that. And then we're going to move on here. So once again, the warm-up document looks a little bit different because I did condense it. I did add that volume profile behavior. If anybody is interested in that, you can find that on that warm-up document. So it'll always be a cheat sheet if you find that useful for your trading. Okay, so we're corrected to double distribution, and we're going to move on with our slides, starting with this weekly chart. So the most notable thing that's going on in this weekly chart is we are now at the top side of value. So you see it's at about, let's say that 427.50 to 428.50 is the value area high on this weekly chart from the top of the market. So when we topped out in, I don't remember if it was the end of 2021 or the beginning of 2022, that is where that profile is drawn from. And as you can see, we are right at the high of that. The first test of that high, and if you look at that warm-up document, just going back a slide, you can see, not there yet. If you go back to that warm-up document, what usually happens is that number 2, we have finally gotten to the extreme of balance, and there tends to be a rejection from the top here. So we haven't tested it yet. It's on a weekly chart, so very high probability, I would say, that we do not continue this breakout much higher before some type of pullback. Or obviously, another alternative is you can see that setup 5 there. We just kind of hang out here, chop around, and then eventually break through. Once we do get that breath signal, I would say that we may indeed be moving into a undisputed bull market. So as I said, in my opinion, the bull market really began October 13th low and was confirmed in March once we got through that trend line from the high. Yet once we start building time and volume above that weekly value area and create a new balance a little bit higher, which will first sign will be a shift to that POC. I think that's a really good sign that we are indeed going to pop a lot higher. But until then, looking for that rejection, perfect area for a pullback here, and we'll we'll see what happens. So we're also, by the way, not only near the top side of that trend line. So if you look at that trend line, that comes from the I believe that's the October 13th low. That comes from the October 13th low. So another important trend line there, kind of stopping us. Then finally, you have that 4 sigma VWAP. That is the outer band, the 4 sigma band of that VWAP, and we're right up against that as well. So plenty of reason to pull back. In fact, I would say their probabilities are much, much higher that we pull back opposed to just breaking through. Probably not today, yet probably at some point before continuing the march higher. So if you want to look at that on a daily chart, you can see it's a little more, it's a little more zoomed in. We haven't quite hit the top of that October 13th trend line. So like I said, perhaps they might want to pop us through before doing that pullback. And you can see that that trend line is going to be somewhere about that 430 area on the SPY. So besides that, not really too much to talk about. We're well above that 4 sigma VWAP band on the SPY, so overextended by any stretch of the imagination. Side note, I'm not really big on RSI, but we did reach the highest point in the hourly RSI since the beginning of the bear market, if this is still indeed considered a bear market, and that happened this morning as well. So plenty of reason to pull back, although I think we're definitely in that dip buying regime. So my personal approach to any pullback, especially significant pullback, is looking to get involved in some longer term long plays. So that's what we got going on those 2 price action charts, just moving toward that TPO, which is really ugly right now. So today's top, we do have a poor high so far. We're like I said, we have that developing double distribution, which you can see, which is signified by that single that we have at about 42.75, and then we have the POC of the day at about 42.70. So 70.75 here for me intraday is going to be a nice spot to buy the dip, try to get involved in a breakout play, and keep the stop nice and tight in case we do have a failure. So besides that, if you can see some areas where we may pull back to if we do get a significant pullback, I think immediate term are just kind of testing some of these levels that we broke, that we created rather, from the breakout starting yesterday. You just have a lot of ugliness below, a lot of untested POCs, and a lot of singles. And then if we go back farther on the TPO chart I don't have here, there's a lot of more structural issues below. So really the main thing that happened today is we took out that final gap. That 425.50 was a final gap to the upside on the SPY, and now we have plenty of ugliness below to correct if indeed we go about that correction sometime in the near future. And if it's in the distant future, they'll still be there, and we'll bring that up when it becomes relevant. So that's what we got going on intraday. Just one more chart here. Don't really have to have too long of a briefing. All pretty self-explanatory, and I think this is really chart of the day. Volatility is in free fall. Plain and simple. Until volatility gets back above 18, we'll say 1870, we are in a volatility free fall. So it doesn't really matter what VIX and UVIX are doing, in my opinion, until the future starts to reflect that. And right now, there's no sign of any fear pouring into the market quite yet. So we'll be watching what happens going into next week. And that's really all that's going on for today. So I'll send that newsletter out just so those levels are put together for you. You can see that warm-up document as well anytime you want. And you can engage with me via the comment section of this video or on Twitter at Routine Trader. I haven't really been too active because, like I said, it's pretty self-explanatory. We're just breaking out, and we have our levels are pretty clear, and we will see what happens from there. So that is all I have for you today. If you find this information useful, as always, please give it a thumbs up to help with the YouTube algorithm. And like I said, other means of engagement are appreciated as well. So I hope you have an excellent weekend. This is a nice short week. I'm looking forward to a full trading week next week. We'll see if we don't get some nice moves again. I would expect going into it, by the way, after such an intense squeeze, probably a lot of trapping consolidation early in the week and potentially all week. This has been a really significant move, so we will see what happens there. And regardless, I thank you for your attention and stay classy until Monday.